Hey, welcome back to YT Finance, and this is the channel where I went to business school so you didn't need to, and today we are talking about SOFI stock, Nio stock, and Tesla stock. In the first article we will be analyzing, it's titled, Wait for SOFI stock to fall 40% before you buy. So not only will we be discussing their upcoming catalysts, but I'm actually going to disagree with this overall author, and you can decide who you agree with. Next up, we're going to move on and talk about Nio stock, ticker symbol NIO, which is an electric vehicle company located over in China. And recently, their share price has surged by around 10%, but this author encourages investors to not read too much into the latest Nio stock news and how this recent rally may be premature. After that, we're going to discuss Tesla's TSLA stock regarding why Cathie Wood of ARK Invest has sold another $5 million worth of Tesla stock, and if this company is still a good buying opportunity despite their very high accounting ratios. So with that being said, I would love for you to go and annihilate that like button right now. Go ahead, press it right now because it helps me out a ton. Don't forget to subscribe for more videos like this one, and you can support me personally by becoming a member of this channel for as little as 99 cents per month. But if you can't afford 99 cents per month, don't worry. By subscribing, you will get this content for absolutely free. And with that being said, I say let's jump right into today's stories. SOFI Technologies, if you didn't know, is a fintech company or a financial technology company that operates as a digital bank. SOFI Technologies has had extremely impressive growth over the last few quarters, and they are also approaching their next earnings report to where they are going to bring in phenomenal revenues and earnings on July 31st. Now, this author particularly says him and another analyst believe SOFI stock is overvalued, and that's why they advocate to sell SOFI stock, and they say that it should be downgraded. However, I'm going to push back slightly on this because if you know me, you know that I have around a 2 to 3% portfolio allocation to this company, and I think it is a phenomenal holding opportunity, even though buying right now is rather expensive, so clearly dollar cost averaging would be the best way into this company as of right now. So the main author's thesis is to say that you should wait for this company to fall to around $6 before taking a position in this company. And clearly he doesn't watch my videos because if you all know me, we've been buying this company back between $5 and $6. So if you originally listened to me many months ago, you would already have an average price and cost basis that's around $6 anyway. However, he does say that the opportunity to buy SOFI at around this price target is coming soon, and it could come after their second quarter 2023 earnings results on July 31st. Now, this is where I think it gets interesting. He says that there is no way to know whether SOFI stock will rise or fall after their earnings, and I agree with him. However, in the previous paragraph, he just said that it will become a buying opportunity after their 2023 earnings report. So in a sense, he is predicting that following their earnings report, the share price will start to downgrade, but he covers his bases by saying that no one knows for sure. Now, he also says that the risk to reward profile right now isn't compelling enough to justify a long-term buying position in SOFI shares. And let me agree to disagree on that point. I would say no, depending on how long you want to wait while holding SOFI shares, clearly SOFI will start to appreciate in value over their current $9 share price, because right now they're trading at around $9.30 per share, while very positive analysts believe the company could surge up to $14, while more bearish analysts believe the company could fall to around $3 per share. Now, depending on how long you want to hold this company, clearly, even if you bought now, but you plan to wait on this company for 5 years or a decade, it's going to be worth substantially more than it is right now. So I would disagree with him on that point. Now, depending on your risk tolerance, maybe right now wouldn't be a good buying opportunity considering that the price seems somewhat inflated, but this actually depends on how you value the company, whether or not you value the company more as a technology company or as a banking institution. The next thing that he highlights is investors are anticipating a huge increase in their overall finances due to the anticipation of the student loan moratorium ending and student loan payments becoming active in October, while the interest for these federal student loans will actually start to accrue as soon as September 1st. And clearly, since SOFI Technologies refinances student loans, particularly federal student loans, this should increase the demand for SOFI Technologies' overall services, and it's going to increase their overall revenues. However, despite this, he highlights how Wall Street isn't particularly bullish about SOFI Technologies, where analysts expect the company to essentially maintain its track record of negative earnings in 2023's second quarter. Now, let me highlight right here. I think he's actually using somewhat of an equivocation, because negative earnings doesn't mean bad earnings. Again, their earnings are actually anticipated to be pretty good. Now, although they are not profitable, meaning that they are bringing in negative earnings per share, that doesn't mean that the overall earnings report is bad, because they are rapidly approaching profitability in terms of their overall earnings and earnings per share. So I actually would disagree with him on that point, and I think that's somewhat misleading. On top of that, out of 17 analysts, 7 of them actually say to buy this company, while a Truist securities analyst in particular reiterated their buy rating for SOFI Technologies because he believes the company is a structural winner as the banking industry fragments. Again, I have gone over the resiliency of SOFI Technologies and how they are not at risk of going out of business, making them a phenomenal long-term investment. Now, in contrast with this very positive analyst from Truist, we see a Morgan Stanley analyst downgrading shares. And again, I think this financial reporter is misleading investors. When he says downgrade shares, he actually doesn't mean that their overall share price or price targets or price predictions were lowered. Rather, Morgan Stanley moved SOFI's rating from an equal weight down to an underweight rating. However, their price target remained unchanged, and like we saw earlier, the price targets range anywhere from $3 on the low end to $14 on the high end, with the current share price trading between $8 to $10. And he says that this one Morgan Stanley analyst is indicating that the stock isn't properly valued, but again, it would depend on how we are valuing the company. Let me agree again, yes, their overall accounting ratios are rather high for a banking institution, but if you view SOFI stock as a technology stock, then it's actually pretty impressive. Even though I do think they are somewhat overvalued, which is why I personally have a hold rating on this overall company, I would not advocate for investors to sell this company, especially if they have a long-term growth trajectory or they are willing to hold this company over the next decade. However, clearly, we will get more transparent results on their upcoming earnings report on July 31st, so I can't wait for that. I also want to highlight that the author of this article is not just bashing SOFI just to bash them, because he does not hold indirectly or directly any SOFI shares, meaning that he is not selling SOFI shares, he is not buying it, and he is not shorting the overall company. This is just his general opinion, which I can respect, but I can also respectfully disagree with him. I don't think SOFI is a sell, and although I do think it's possible for SOFI's share price to pull back, I'm not sure around 40%, but clearly they can pull back in their overall price, and I've actually predicted that that will happen. I don't think that this institutes a sell rating for this overall company, but I would love to hear your thoughts down below. Now let's talk about another stock which is surging lately, which is an electric vehicle company located over in China, ticker symbol NIO, ticker name Nio. And Nio right now is currently trading at around $13.14, while very bearish analysts believe the company could fall to around $7, while more bullish analysts believe it could surge up to $20. Now, the reason for their current share price being around $13 per share is that recently they actually jumped around 10% in their overall share price, and that's what we're going to discuss right now. Nio seems to be making very big moves, especially since we've seen this large spike in their overall stock price. However, no major headlines were actually released, because after a jump of around 10% or more, you would assume that some major headlines or maybe some delivery numbers or promising fiscal results came out, but literally none of that happened. So the question is then, what drove this rally in their overall stock price? Well, I think the key driver for this was news from the general Chinese economy, especially news that came out from China's National Development and Reform Commission regarding their plans to provide quote-unquote support to private investments in various sectors of the Chinese economy. And this would include electric vehicle makers such as Nio, particularly in regards to their battery swapping station network. If you're not already familiar with this technology, Nio, which is an electric vehicle maker, actually has technology to swap out their electric vehicle batteries. So instead of going to a charging station, which could take anywhere between 7 to 20 minutes to charge your overall vehicle, Nio can literally swap out your battery in around 5 minutes or less, making them way more efficient than electric vehicle charging stations, although they do offer charging stations as well. So their ability to swap out batteries does give them somewhat of a technological advantage in the market, and these swappable batteries allows Nio to offer cheaper vehicle prices because you get to rent your overall batteries, which is very cool. On top of that, we also saw a surge because the prevailing view right now among professionals as well as myself is that Nio will reaccelerate their revenue growth after the second half of the year. So from their Q3 earnings report onwards, we could see this company radically increase their overall growth rates, which I think should reflect very positively on their overall share price. However, the bad news about this is you have to get through the next few earnings reports, which could be rather negative, thus pushing the stock even further down. Therefore, this author concludes that the downside risk is extremely high for Nio, and skeptics could easily be proven correct to where this company could fall even lower down to around $7 per share. Now, for me, I like BYDDY or BYD as well as Tesla. Those are the top electric vehicle holdings in my portfolio. I also like Stellantis as well as Li Auto. In the news, we also saw XPeng have a partnership with Volkswagen. So Nio seems to be pressed in their overall competition, causing them to lower their overall vehicle prices, which is not necessarily good. But over the long term, it seems that Nio could make a huge comeback. However, for transparency, I only have a 1% allocation to this company, and I do think that there are future potential. However, I would not advocate for a huge or a very large position in this company. However, I actually think that the risk to reward ratio for Nio is completely worth it, which is why I have invested into this company. Now, lastly, let's talk about one of my major stock holdings, which is Tesla. Tesla, ticker symbol TSLA, is an electric vehicle company also specializing in artificial intelligence as well as energy storage and energy generation. Currently, the TSLA shares trade for around $263 per share, while on the lower end, analysts believe it could fall to around $232, while other bullish analysts believe it could surge up to $350. And for me, I do believe the company should be worth and be trading between $300 to $350. But despite this, one of the largest Tesla bulls, such as Cathie Wood of ARK Invest, sold around 20,700 shares of Tesla stock recently for around $5.49 million at a closing price of $265.28. ARK Invest has also offloaded more shares leading up to and after their earnings report by as much as 73,000 shares being dumped by Cathie Wood. So this is somewhat interesting. However, Tesla does have multiple catalysts coming out, such as their Cybertruck full self-driving betas and their overall electric vehicle semi-trucks. And although I would 100% agree that their accounting ratios are crazy high, I think Tesla could actually catch back up to these accounting ratios due to the future catalysts of this overall company. So then this begs the question, should investors buy, sell, or hold Tesla stock? And honestly, it depends. It's going to depend on your age, risk tolerance, your current investments, how long you plan to hold the company, what your portfolio looks like, and your current exposure to this company. However, overall, I think you should clearly leave room to dollar cost average down the price of Tesla because it could pull back before surging. But overall, I still think Tesla is a phenomenal buying opportunity, especially if you are a long-term investor. So with that being said, I would love to hear your thoughts down below on SOFI stock, Nio stock, as well as Tesla stock. Tell me what you think of naysayers saying to sell SOFI, what other people are saying about Nio, and what you think of Cathie Wood selling Tesla stock. With that being said, I will see you in the next YT video.